You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back with episode 2 of your bi-weekly options extravaganza, known far and wide, hither and yon, as the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the aforementioned network. Apologize to you for a little bit of the late start today. The equipment here in the southern studio was not... it's not playing ball. But we got it all up and running now and raring to go. So let's just dive right in. You folks have been waiting long enough. Joining me on the program today, my venerable co-hosts. First, let's go out to the quiet, the sleepied landscape known as St. Charles, where we are joined once again by the uncleest of Mikes. I defy you to find an uncle more uncle-y than him. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the show, sir. How goes it being the uncleest of Mikes?
Hey, it's great to be here, and just to add to what you're saying on the uncle claims, that's really no joke. I can honestly say I was a great uncle while I was still in my 20s.
There you go. You had an early mover advantage on all the rest of us out there. And then going out, I don't know what kind of uncle he is. I guess we could find out. He is not the uncleest, but he is the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to the show to you as well, sir.
I'm a little confused by how he could be a great uncle in his 20s.
I don't know. That's one of the great mysteries of TOSAW. We have to let him explain it to us.
There was a 17-year age gap. My wife was the youngest, and there was a 17-year age gap between her older siblings. So that's how I got to be a great uncle.
See?
Oh my gosh! There you go. I am a uncle to many, and so far, I believe my moniker has been Uncle Fun. I believe. I
would have said he would have been like the middling uncle, but you never know. Maybe the bar for uncledom is kind of low up there in Maine. As we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading out there on our screens today. And the day was starting off kind of mixed. It seemed like the Dow couldn't get out of its own way. It was hanging out red, but as we kicked off the show, it has finally ticked to the green. We have it up ever so slightly, up 0.1%. The S&P up 0.6%, and the NASDAQ up about a full percent. Let's see. Did the S&P, let's look really quickly. The S&P, did it get up over, come on, pull up my S&P. I don't want the NASDAQ. There we go. Did it get up over For some reason, it won't play ball with me today. So I'll have to look later to see if it got up over the 4,000 level. I don't think it did. We're hanging out 39.84 right now, listeners. Here, of course, that means all of our vol friends relaxing a bit to kick off the show. VIX is at about 23.30. It's off about 1.2 points from Monday's show. VVIX was at about an 85. That's down 5 points from where it was on Monday's show. VXX 2140, that's literally unched. So VXX, once again, doing its own thing. Go figure. UVXY 12, even, down a half a point from Monday's show. SVIX 1170, up about a third of a point. Remember, that's the inverse product out there. UVIX 1320, that's down almost a full point, about 0.8 of a point. And VolQ was at about 28 when we kicked off the show. That's down pretty much a point from Monday's show. So down slightly, but not a ton across the vol landscape. Let's go out now to the most middling of uncles, the Rock Lobster himself. Mr. Rock Lobster, sir, what is lighting up your tape out there in the markets today, sir?
Most middling of uncles. I apparently you didn't hear my Uncle Fun comment.
I heard it. I just chose to ignore it.
Just, I guess, again, the benefit of benign dictatorship on your own radio network. Now I see why you started this radio network in the first place, because you wanted to be the dictator of all you survey. What am I watching? Okay. Kind of what I would say more market conditions that are not 2022. So we opened down a little bit today. We rally. Now the vol's coming off a little bit in the short term. You know, SPX is up a little bit. VIX is, I would say this would be more, this is actually the not 2022 market day today. Very different. Feeling like a bunch of people need to get, let's just say, they all of a sudden they're like, hey, we might be missing this rally because we just went from 3,700 to almost 4,000 in 2 weeks? So, or 3 weeks, I guess. So there might be a little FOMO going on as the market goes sideways. And we're waiting for some pretty big tech earnings. The Europeans are finally raising rates because they can't sell bonds for zero interest rates anymore. So they have decided to go all the way to zero, from minus 50 to zero. And they are going to make that work now, apparently. So the only thing I could say on that score is it feels like a market trying to recover somewhat from the sell-off, but it is not in any big rush. And I think the big drag today is probably, it's weird, oil stocks and airlines are down at the same time. So I guess the airline industry is just having they're having a pilot shortage. Like, you just can't make those pilots. The pilot machine is apparently running too slow for the airline industry currently. And then all the people that, you know, they basically went from not flying anywhere to all of a sudden everybody wants to just get away. So as an industry, that's having problems. But I would say it seems like earnings not as bad as everybody said, except for AT&T, which was a pretty hard sell-off, almost 10% on the day at one point. So I think it was over 10% because it traded around 18.25 or something. So yeah, it was probably at one point down 10%. Pretty hard sell-off, I would say there. So they were like, customers aren't paying us back as fast. So the rest of the market is shrugging that off. I see that as kind of maybe it's a backward-looking indicator, but it's they have to mention it. I don't think that's a great thing. But stocks don't seem to be minding it too much. So I just think at this point that's what we've got. So I would say this is a very not 2022 market. You have the market's up a little bit, vol's down a little bit, but we are still only 65 basis points out of the danger zone, which is quite amazing. So for listeners at home, I like all these vol statistics. You know, But and what I've told my students is that longer term vol is finally come down, but it's still, there's only been 2 other episodes where we've had this much extended realized vol in the SPX since the great financial crisis. One was the great financial crisis. 2, the great financial crisis. The euro crisis, where everybody thought the euro was going to zero. Then we were all going to die from COVID. And now this. So whatever 2022 is, we'll just call it the year where everything went wrong. And that was the longest stretch of realized vol. This average being over 60-day vol was over 29% for a while, something like that. 30-day vol was over 30 for a couple of months. And that just doesn't happen very often. And look at, comparison-wise, great financial crisis, euro crisis, COVID, and now this for that extended period of time. So those were all major things. And, everybody thought if the Fed was going to raise rates, it's going to be bad for stocks. And you know what? You got to believe them at this point, because of all the predictions I have heard, that has been the most durable. You could almost peg the exact top of the market to when the Fed shut down quantitative easing or started to taper it back in the fall. That was the top for the Qs. It was the top for ARC funds. It was the top for any speculative anything. You could almost pin the date, and ever since then, it's been a one-way trip down. And I guess the only thing I can think of now is the market is starting to look past the Fed rate cycle and trying to decide kind of what train to get on next. And right now, it looks like, hey, maybe there are some bargains out there. And that's what I'm seeing, at least right now, from the flow that's coming in.
So the question that remains then, if this is not a 2022 market day, what year are we in today? What year is it? 1978? What are we talking?
This is feeling like, again, very odd, though. We have a rally. We're having a rally, and VIX is still almost 24. So I still think it is it's unique. It's unique because at some point in those other parts of the cycle, let's say this is 2010 or 2009 or, maybe 2012, beginning of 2012. However, in all of those times, VIX has gotten into the middle of zones, we've had a lower VIX. So I think it would be good stats from Russell on this, but from where we are relative to the high, I still think VIX is relatively expensive. Given from where we are from the lows for SPX, 3,700 to here, the fact that we're still at a 24 vol or roughly 24, although we are in zone 3, so that's significant, right? But I think this would be, I would guess that Russell would be hard pressed to find a sample where SPX is relative to the lows and how high VIX still is. That would be a guess. But, if anything, I'd have to say 2012 coming out of the euro crisis or 2009, say that kind of like summer 2009 coming out of the financial crisis. Once, there was some loan guarantees and stuff like that coming out when TARP sort of came out. People started coming out from under their, desks. So I'm guessing like that. I'm thinking of that kind of time frame. But again, when the first time SPX went through 4,000, and let me see over the last 2 years, right? Vol wasn't anywhere close to this. The first time we crossed 400, VIX was probably 19. So, and that was and that was coming out of quite a bit of volatility. So this is still, I think, a relatively high level for where SPX is. Those straddle values are still pretty pumped up 30 days out.
You know who else is pumped up? It is Uncle Mike. Mr. Uncle Mike, sir, when you're not busy pumping that iron, sir, what is lighting up your tape today?
I need to go pump some iron. But anyway, what's lighting up my tape is that in addition to what Andrew said, we're getting 4,000 is what I'm focusing on right now. Are we going to break it? Is this just going to be a pivot point back to the downside? I think that's a key question right now to ask, because we're looking at it from a technical standpoint. We've had this magnet number of 4,000. We came back down to it in early May. We rallied off of it a little bit. Then we went way below it roughly a month ago in mid-June. Came back up to the 39.5 mark in late June. Then we went back down to the 3,700 mark. Came back up to the 3,900 mark. Came back down to the 3,700 mark. And then now we're approaching 4,000. So from a technical perspective, what I'm looking at right now is, did we break out? We closed above some moving averages. I believe it was yesterday. And so whenever you have something like that, that could be a bullish signal, not necessarily because moving averages are all that, but because everyone's looking at them. And so ultimately, the market wants to go up. The market always wants to go up throughout time, except when it goes down, of course. But ultimately, this is a very strong bull that is lying beneath the S&P 500. And so that strong bull, ultimately, when he gets awakened, is going to be pretty fierce and ferocious. And so the question becomes, is that right now, it's like the bull's awake. He's woken up and he's kind of stretching and rubbing his eyes, and he's looking at the 4,000 mark, and I think he's just deciding whether he wants to hit the snooze button and go back to sleep and let the bears run the show, or if he wants to get up. He's kind of wondering right now if he should hit the snooze button or not. That's kind of what I'm seeing at this point in time. In terms of some other markets, 10-year dropped yesterday. It's rallying today, up 0.7% in the 10-year note. So we do have a little bit of a situation to where bonds and stocks are rallying at the same time. That's always something with which you want to keep an eye on. We're in the midst of earnings season right now, so there's a lot of things going on along those lines. On the commodity world, oil's down again. It's below the 100 mark, and so right now, you could argue that perhaps 100 could be another magnet number in the oil world. And this is just going to sound weird to say, but natural gas is unched. You don't really get to say that very often. So I figured I'd just take advantage and just say it while I actually have the opportunity to do so. And that is what I'm seeing right now in this marketplace.
Let's see what we're seeing out here across the rest of the market. And, even though it's kind of a mixed day, VIX is not really keeping up with the Joneses today. Kind of a light day for VIX. 186,000 contracts on the tape today, the ADV 467 out there. So it doesn't seem like it's going to hit it today, but we shall see. The day is still young. SPY, 3.51 million contracts on the tape right now. The ADV, 6.79 million out there. The S, 1.23 million, so decent paper on the tape for the S. The ADV, 2.14 million, so more than halfway for the S. The IWM, 489,000 contracts. That ADV has fallen off to 699, so it seems like it's going to threaten that today. And the Qs, 1.53 million contracts on the tape right now. The ADV, 2.39 million. Let's go out to the single names now and see what we've got in store for us today. And, earnings season is delivering some single name paper. Go figure. 246,000 contracts is what it cost you to break into the top 10 most active today. That gets you all the way to the artist formerly known as Facebook. And number 9, we got the Google, 271,000 contracts on the tape for them. Number 8, our old friend, frequent offender on options oddities, sometimes on the odd block. It is ChargePoint. ChargePoint good for 305,000 contracts. It's a pretty robust day when we're at number 8 and we're already over 300,000 contracts, listeners. Number 8, ChargePoint is trading $14.88 right now, up about 56 cents or nearly 4% on the day today. Number 6, good old AT&T, a.k.a. telephone. What the old timers used to call it. They're selling off a bit today, off about $1.50 or nearly 7%, trading right around $19 even out there for AT&T. Good for 429,000. We're jumping up now, 429. We're only at number 6. I skipped to number 7. Number 7 would be Snap. 362,000 contracts, listeners. Snap hanging out at about $16, up about 50 odd cents or about 3.6%. Then we have number 6, AT&T, 429,000. Then number 5, usually hanging out around the 4 to 5 spot. It's AMD hanging out at 5 today, 430,000 contracts. Number 4, it's partner there right around the 4 to 5 spot. It's NVIDIA today holding out at number 4. good for 467,000 contracts. Number 3, the Amazonian, 627,000 contracts on the tape. Then we get to number 2, the fruit company, Apple, 853,000 contracts. Kind of a light day for Apple, all things considered. And then number 1, feeling the earnings rush, it is Tesla, closing in on 1.6 million contracts, so nearly doubling Apple today. That is quite the move. Tesla, $71 to the good, almost 10%, 9.5% to the good today. 813 and change is where they're trading right now. So quite the run here for Tesla. Let's see. So after being back down in mid-June, they got down to 620. Now trading 811. So yeah, nice little run. Of course, still well shy of the 1,000 level everybody talks about out there. Tesla also making headlines today because they dumped 75% of the Bitcoin that they bought to much fanfare a little over a year ago. Actually, it was February of last year. So let's see, where was Bitcoin when they were buying up all that juicy Bitcoin over a year ago now? Let's see, let's go back to February. Yeah, they were flirting with the highs. Bitcoin last February was trading in the 40 to 50 odd thousand range. So they dumped it all recently. They took a huge hit on all that Bitcoin holding. They bought $1.5 billion worth of Bitcoins, I believe. So definitely not worth that much now. But apparently that's not impacting their earnings at all. The stock still looking pretty strong today. Speaking of earnings, let's get out there for the rest of this week. Here we got the names and numbers hot off the presses from our friends over there at ORATS. This week we had a ton of names popping off. Beamer on Monday, Goldman, Bank of America, and Chucky Schwab. Tuesday, J&J, Ally, Hasbro, Toyval, Netflix, IB. Wednesday we had Abbott Labs, NASDAQ, Alcoa, and Tesla. Thursday, AT&T, American Airlines, Snap, and all sorts of fun. Let's get some of those results right now. AT&T there before the bell today. $20.50 is where they were trading going into their announcement. They were pricing in 3%. They delivered nearly 8% to the dark side. So outperformance for AT&T. United Airlines, they were yesterday after the bell. $41.70 is where they were trading going into their announcement. They were pricing in 6.1%. They delivered 9%. So extra vol working out there as well. American Airlines, 15.25. They're pricing in 6%. They delivered 8.1%. So a little bit of outperformance there. Tesla, they were going into their announcement, 742.5. They're pricing in about 6%. They delivered 7.2%. And of course, right now they're up, let's see, on the day, about almost 9.5%. So nice little run for Tesla. Let's keep on rolling here. Let's see, we've got big names coming up today after the bell. Snap, $15.50 is where they were trading. They're pricing in $2.50. In the past, they've moved $3.07. So a little bit less juice on the Snap front. We got Twitter tomorrow before the bell, $39.60. They were pricing in $1.32. In the past, they've moved $3.33. Interesting. I'm not sure how much of that is impacted by the recent madness with Musk out there. Google next week, 26 after the bell. They're trading right around 114. They're pricing in 6.25%. In the past, they've moved 5.6%. So a little bit of extra juice out there. So far now, week 1, 15 names reporting 96%. Week 2, with 21 names reporting an apocalyptic 47%. That is no bueno, listeners. So we're averaging out right now at 61%. That is pretty terrible. Luckily, the game's just getting started, listeners. So we shall see how things roll. In terms of earnings, trades reports for you, we've got 53 long straddles right now, 22 short straddles, 42 long calendars. Looks like they exited a straddle today, and I can't read this ticker, but looks like they exited a long straddle today. They have the price performance on it and everything else. You can check that out for yourselves on the earnings trades report. You can check all the stuff out for yourself, listeners. TheOptionsInsider.com is the place to go. Meanwhile, we have to go on into our next segment. It is time to get weird. It is time to get wild. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for The Odd Block.
everybody, let's do this thing. Let us commence the weirdness, the wildness. Let's go out to Snap first. And let's see. Snap, of course, Snap, ticker symbol Snap. Are they a camera company? Are they a social media company? Are they a little bit of both? They make camera drones and all kinds of weird stuff. Trading right now, $16, pretty much even. Excuse me, up about half a buck or about a little over 3% on the day. So a nice little pop for them. On the year, a year ago, they were trading $63, and they shot up to about 83 and a third. That was kind of their high for the year. That was in September. And then they kind of fell off a cliff again. In October, they went from $75 down to $54. So they took a nice hit there. And then they've been kind of trending lower ever since. They got to their nadir. Looks like it was back. Was it in June? Looks like it was in June. Yeah, about $11.88. So they have rallied from there, trading right around $16 right now. Let's see what our Eye of Sauron found today. Looks like someone drawn a pretty big line in the Snap sand, Mr. Rock Lobster. In particular, it was the August 9 puts. 9, that's interesting. I said they're trading $16 right now. The lowest they've traded this year was $11.88. Someone's selling the 9 puts this morning. August 9 puts, by the way. 12,555 times for a whopping 12 cents. That is a 131 vol if you are so inclined. And again, this is immediately before earnings. Earnings are after the bell today. Mr. Rock Lobster. Someone drawing a line. I wouldn't call this a daring line in the sand. I wouldn't even call this an aggressive line in the sand. They're saying if they want to buy Snap, they want to buy it at kind of near all-time lows. But they're willing to collect a 130 vol to do so, sir. What say you?
I was looking at this. It's not my cup of tea as a position. What would I do? I'd probably sell a 5 lot. That's what I would do. I'd sell a 5 lot where you make $60. It probably would be an easy $60, I would guess, because tomorrow those puts, put it this way, you either get Snap at $9 or those puts are $0. So is it reasonable? I would say, yeah, it's line in the sand-esque. It's coming in around the money. It's a little about $150,000 in premium taken in. So, or you're taking Snap at the low. So again, as a strategy, we've seen this time and time again. And I don't think it's unreasonable. $9 for that Snap property looks like a pretty decent price, but you're going to have to want it there. That's ultimately the gig. So I don't think it's a bad. I don't think it's a bad trade for people that want to buy Snap at $9. So, tomorrow by tomorrow, you're either those puts. Their puts are either in the money or near the money, or they're $0. There's probably not a lot of place they can go in between.
Yeah,
instant decay.
You're right. You're getting all your 12 cents, or you're getting some Snap stock, probably. And $9 for Snap stock. I'll have to go look. Let's see how far back. Let's see what is the low. Back in 2018, it was trading $5. So if you go all the way back to 2018, there are better levels. But in recent memory, yeah, they haven't really traded below 20. Well, actually, take it back. During the pandemic, they got down to $10.09. So that's still not, as I knock over half the stuff here in the Southern studio, that's still not $9. So you're getting it at a better than pandemic sell-off low. So yeah, $9 for Snap. If you want some upside in Snap, there are worse ways to get it. You like these 12 cents, listener? You guys like yourself a little bit of a cheapy line in the sand put. I got to say, not a heck of a lot of risk with these. It's not like they're selling the 15s or something. They're selling the 9s. You want your 12 cents? Go to town. Let us know how it works out for you. Let's go out now to another name. I think we've talked about this one, but it has been a little while. This is Turning Point Therapeutics, ticker symbol TPTX, trading right now 74.64, off about a third of a point or about 0.5% on the year. This name is this looks like a biotech. Just straight lines up and down. A year ago, it was trading $67, so it's up a little bit on the year. It rallied up to about 82 and change. That was pretty much the high for the year. Then it sold off hard again by October. It was hit 82 in September. By October, it got back down to $45, and then it trended lower. It got down to 35 in December. Then it got back up to looks like about 51 in January, at the beginning of the year. Then it sold off again, was hovering, got down to 23.37. That was the low for the year back in May, and was still hovering around $36 on May 27th when, like any good biotech, it had a parabolic upward movement. It went from $34.16 to 74.59. That was on June 3rd. My goodness. I'm guessing they got something approved. I don't know what. But that's why you get into the biotechs, right? For freaking straight upward, pretty much doubling events overnight, like this name had back in early June. And now it's still hanging out right around the $74 to $75 range. My goodness, what a freaking shot up this thing had. Man, if you had some calls on this bad boy, you were looking pretty good. Let's see what our Eye of Sauron found out there today. Looks like someone maybe, Mr. Rock Lobster, and I say maybe, someone maybe is not feeling the flow anymore. They're not feeling the love for Turning Point Therapeutics. Or maybe they're saying, hey, I made some decent money on this. I want to try to keep some of it. Because someone picked up almost 4,998 to be precise, of the Jan 2023 50 puts. They paid 60 cents. Now, I say maybe because this market was kind of all over the place. It was a dime at $1. That's a crappy market. And so they traded them for 60 cents. I'm going to go out on a limb and say they probably didn't find a 60-cent bid. I mean, anything's possible, of course, but I think they probably bought these for it's a 41 vol. The stock was right around here, and it went up $74.94. The next earnings announcement is going to be on August 8th, so they get a few cycles with this. Mr. Rock Lobster, what are your thoughts, first off, on this crazy parabolic straight upward move in Turning Point, and then now maybe someone buying some puts against it? What are your thoughts, sir?
Again, an interesting trade. I looking at this crazy thing, and you have I like how you sometimes you go, oh, TPTX. You got to find the craziest tickers you can possibly find in the ticker universe.
It is called the odd boxer.
It is. And then all of a sudden it has a, and then boop, you get the, so you're looking at this, and I want to say somebody sold these things.
You think they found a 60 cent?
Trying to do their.
You think they found a 60-cent bid for these? It's possible, I suppose. Maybe.
It looks like it's actually just being bought out. I don't know enough news about it, but I could see them kind of from a risk arb point of view coming through and somebody covering those things. But the stock is up what, 50 let's see, $40. Again, a weird one. So if you're retail, why do you buy the 50 puts? That's my question. If you're a retail trader or you're like a large fund trader, why do you pay 60 cents for those puts? I don't see the reason. I could see if you're a biotech fund and and you want to say, hey, I'm trying to show that I'm long this thing or something like that, but I can't, if I own the stock, I would just take the $75 at this point. Why would you bother buying the 50 put?
Want me to add another wrinkle? Add another wrinkle to the mystery. They traded 5,000 times, pretty much at 12:01. The market was a dime at $1. They traded 10 minutes later. 5 lot traded for 30 cents. The market was 25 cents at 30. And then they traded 5 minutes after that. A 10 lot traded, and they were still 25 cents at 30. And so someone was buying them for 30 cents 10 minutes after when they already traded 60 cents. And the stock had moved 2 cents.
Yeah,
that shows how nonsense that first market was.
Well, also too is and what's the current mark on this option right now? I think it's marking 30 cents after trade 60. So it feels like some, Again, if this was a customer paying 50,
somebody crossed them.
They
paid 60. Someone facilitated them generously at that price, and now that customer is pissed.
Yeah. So, again, this is a head. I just can't. If I own the stock and it's up $45, you're going to pay the capital gains on it anyway. You might as well take your for sure money and leave. I don't know what buying the 50-cent put, I don't know what buying that put does you. But there's very little open interest. So the whole thing is I don't see how the customer likes that side. It's just I don't see how you're making, unless you think the whole thing is crap. There you go. That's a possibility. And it's pure speculation, but it does feel, like the 65 puts are no bid. They're even no bid for the 65s. So I'm saying if paper was a seller of those puts, right? They're selling them. So that's why I'm saying paper has to be the seller of them, because now the liquidity providers long them and there's no bid for anything else anywhere else. Now there's a quarter bid out there, which is still kind of odd. I'm trying to figure out how big that is. But there's no bid for all the strikes above. So it's the quarter bid is for 25. What are they trying to make the market look good? Again, very, very odd, because there's no bid for the 65s, no bid for the 60s, no bid for the 55s. So I just assume the liquidity providers long them, the customer sold them to them, and then nobody wants any puts afterward.
Let's hope the customer sold them, because if I paid 60 cents, if I come in for 5,000 and I get the market of a dime at a buck, and I have to pay 60 cents, and then they're trading 30 cents 5 minutes later, I'm getting an adjustment on those bad boys. So hopefully the customer.
I know,
and
it's a little painful.
That's
either
rough.
way, somebody's not feeling good.
No, yeah, you're right. Either the liquidity provider is choking on them, or the customer. Probably better the liquidity provider. They have other ways to get out of them, but yeah, someone's choking on a whole bunch of vol out there, listeners, that they probably did not want. That's rough. All right, let's go out to these. These were actually a listener request from our live chat on the last show. This was SOXL, ticker symbol SOXL. This is the Direxion Daily Semiconductor Bull 3X ETF. Someone at the time was coming in for size on the July 17 calls. We saw 5,000 lots going up for 33 cents. Then we saw 2,500 going up for 30 cents. These are expiring tomorrow, the July 22nd, 17 calls, listeners. 2,000 more for 45.5 cents. Over 27,000 traded on the day. And the stock at the time was $16.07. And spoiler alert, this one seems like it worked out pretty well, listeners. The stock right now, coming into the show, was $18.78. It's $18.60 now. It's still up 40 cents, but more importantly, it's way north of that 17 strike. And it looks like our friend here, they got smart and they got the heck out of Dodge pretty quick, because it looks like they dumped most of these, not all of them. There are still 9,000 to 10,000 open on this strike. So that could have been new paper coming in. He could have left some on, but he dumped a fair amount of them. Almost 10,000 he sold the very next day on the 19th for 75 cents. So obviously he bought them at different prices, but he looks like he pretty much doubled his money, or pretty close to it. And then he dumped another 3,500 for 66 cents, 3,200 for 70 cents. So let's say he got out for an average price of somewhere around 70 cents. Then he made at least 300 grand and probably more. I mean, depending on how many, he still has about 10 grand left. But yeah, it looks like he made probably, let's say 30 cents. So let's say if he took off 17,000 of the 27,000, then he's doing all right. He's doing all right. That's talking about $500,000 at that point. I mean, again, it's kind of a bit of a guessing game, because we don't know exactly how many he took off and how many, and what his exact price was to get them all off. He took them all off, put them on in chunks, took them off in chunks. But at the end of the day, Mr. Rock Lobster, this guy came in, he swung for the fences in this 3X levered. That's another thing, listeners. If you're buying options on a 3X levered product and you get a move, you got to strike while the iron is hot. You cannot wait around. And this guy or gal figured that out pretty quickly because they got the heck out of Dodge and they made some decent cash, anywhere from $300,000 to like $500,000. Mr. Rock Lobster, what say you, sir?
It just looks like an old fashioned trade where you buy the calls and the stock goes up and you make some money.
Is that how that works? Okay.
I would like to say it looks different, but it appears that they did a pretty nice job there. Let's see here. I think they. Wow, is SOXL a loaded? Because sometimes those direction products
it's a 3x levered.
Wow. Well, it's definitely. Let's see. It was $70. It was $11. Wow, look at that thing just come spring back to life. I guess the best way to trade these levered products is short-term options, looking for a really big move. So, these have actually, in June, this was a $27 product. I think this is just, they bet on, I guess Congress also is trying to throw some sugar on the semiconductor industry to the tune of $70 billion.
Yep, the Pelosi's are getting long, baby.
I'm all for the U.S. building chips in the Northern Hemisphere or in the Southern Hemisphere, but particularly on the North American or South American continent, where we really don't have the supply chain issues, and we can just move them across the ground or by ship very close if we need to. Where, I'm all for I'm good for Mexico, good for Canada, good for Costa Rica. Throw a fab plant there. But I don't think the semiconductor needs the U.S. government to give them $70 billion. However, it appears that that's all they can agree on at this point.
Tell that to the Pelosi's, baby. They're getting long all the chip names.
No, not getting. They already are.
They already are long. You're right.
Yes, I actually saw the meme on that today when they asked her about, has she ever told her husband about anything happening? Has he ever bought stock on insider information? And she's like, "Don't be ridiculous. No, never." And then she threw the mic away and walked off the stage. So, she's claiming that her husband is just quite possibly the best.
He's very skilled.
Trader.
He's very skilled.
Retail trader on the planet. So we'll give him that. I'll give it to him. I'll give him that credit. He is the best retail trader on the planet with a wife that is the Speaker of the House.
Yes.
We'll give him that caveat.
That is helpful. That's a helpful thing. And you know what else is helpful, listener? A little bit of your mail block. So let's get to it.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block, the portion of the show where you guys ask us questions. We also turn the tables back on you sometimes. We're doing that again this week with our question of the week, asking you folks, we've seen a nice pop in equities and crypto over the past week. Are you buying back in at these levels, or is there still more blood to come? And we gave you 4 choices. I'm buying equities here. I'm buying crypto here. I'm buying both here, so you're diving in with both feet. Or there's more blood to come. Let's go out to Uncle Mike first. Uncle Mike, sir, what are you feeling? I know you're already long a ton of crypto, so we can just assume that from you. But aside from that, what is your vote? What do you think our audience is voting for? Whoa, someone's typing up a storm.
Why wouldn't you want to just put your whole life savings into levered crypto products? I mean, I don't see how you can possibly go wrong now. I think that we might still have another run up in crypto, maybe 2 of them, but within 5 years, this will be totally over, in my opinion, the whole crypto craze. Not blockchain technology, that will not be over, but the crypto phase will be done within 5 years. So it is useless drivel. In terms of where the audience is, I'm hoping they agree with me.
And Mr. Rock Lobster, same question for you, sir. What are you feeling? What do you think our audience is feeling, sir?
I think I agree with TOSAW on the crypto thing. I think it's basically, it is an ice cube in the refrigerator. It's not going to melt to zero. It's
love
not
that.
An ice cube. It's not an ice cube in the sun, right? Where it's gone tomorrow. I think but it's going to melt a little slower than that. So I'm going to say I am not buying crypto here. I have been adding it to equities as per my normal boring thing. When markets, do this crazy correction, I buy a little every week, right? Whatever cash I have taken off, I start to redeploy to a certain amount. So I've been buying. So I personally think retail. I think they're smarter. Or they're not dumb. I don't think they're buying crypto here. Although my kid did kick me because I didn't buy him any coin at $48. I was like, Dad, it's already $72. I was trying to explain to him about volatility, so I guess he gets it now. Okay, but I'm saying just buying equities here. I think the poll will say buying equities as well. They're staying away from that crypto. Staying away from that.
Let us find out what the folks are up to here. It was just up on my screen a minute ago. One of these magical things in the Southern studio, listeners. Nothing seems to work. There we go. All right. We have about a day left in our poll, and 51.4% of you out there, you're fading all of this. You're saying there's more blood to come. Dead cat bounce. Get the heck out of Dodge. Don't get into this sucker's rally. And then, not right behind it, a distant number two really, is I'm buying both here with 18.9%. And then you're buying equities here, 16.2%. And then only 13.5% of you buying crypto right now. Of course, others of you have different thoughts. Daniel Hoban saying he's buying here, and there is more blood to come. So he's buying, but he's not too optimistic about it. And then Marine Recon saying he wants a fifth option that he never blanking sold. So if that's the case, he's been riding the elevator up and riding it back down. Hopefully you've been able to do some stuff along the way there to make it a little bit less painful for yourself there, Marine Recon. By the way, our live audience, they want us to get Paul Pelosi for the pro Q&A hot seat next week. Yes. Don't make me laugh, listeners, but yes, we will look into that for you. That would actually be, I think, pretty fun if we could pull that off. Why are you exercising your leaps? Why don't you just sell them? Hey, all sorts of fun we could have with Mr. Paul Pelosi. Instead, let's go into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on until we can gather here together on the option block once again on Monday. Let's go out to the Uncle list of Mike's first. Mr. Uncle Mike, sir, what are you keeping an eye on here until Monday's show?
Well, I'd love to see Paul Pelosi come on the show. That would be awesome if you could pull that off. But what I'm watching right now going into Monday, I want to see the 4,000 mark. I think that's the biggest thing to watch. Right now, we're at a higher channeling point in the 10-year note than we were a couple months ago. So I want to see if we can catch a bit off of that, or perhaps not. I'm curious to see how we react to the upcoming rate hikes that will extremely likely be coming, to see if this has already been factored into the 10-year note, which I think it has. So a lot going on.
Uncle Mike, back on that boat with that 10-year note. Mr. Rock Lobster, same question for you, sir. What are you keeping an eye on through the weekend until Monday's show? Besides typing frenetically.
Sorry. I'm trying not to do that. I got the problem with being a mentor and trading and doing these radio shows is that sometimes I need to hit the mute button. But when I do that, historically, what a massive fail that is.
Whenever you hit that mute button, you have a 70 delta of never unmuting yourself.
That is, I think the 70 delta, Mr. Longo, is light.
I was being charitable.
You were. I appreciate that, though. For some reason, you still keep me on your show. I have no idea why. But I say, what the heck? As long as you invite me, I will show up. So, again, 4,000. Well, we are literally a half an expected move away. Like daily move is almost 1.5% SPX. We have gained a whopping 1/3 of a point, 1/3 of a percent today in SPX. So it's not going to surprise me if we're 4,000 by Friday. And then what's weird is, and then everybody will start to worry on Monday about how high the FOMC goes. Do they go 75 or 100 basis points? And then the focus will shift to there. And then after that, can big tech make a lot of money again? So I think that's kind of the range, but it's not going to surprise me. And I do have some positions that would very much like to see 4,000 by the end of this week. And again, it could be a little bit more fun on the weekend. Probably not, but what the heck. So I think those are the things. And Mike TOSAW can use my crypto is an ice cube in the refrigerator. He is free to use that all he wants on his
man, I love it.
channel.
He's already buying the URL. Crypto is an ice cube in the refrigerator.com.
For sure.
Just think of the traffic you'll get on that URL, sir. All right, listeners, with that hilarious image in our brains, that's going to do it for this episode of The Option Block. If you're saying to yourself, I need more in my ear holes, don't worry. We got you covered. You know how we take care of you here on the network. Coming up in a little bit after this show, we'll be live again with TWIFO. Our guest will be Todd Colvin from Ambrosino Brothers, holding down the hot seat this week. So that should be a fun one. Live listeners will pump some fun stuff into the live chat. You can hang out. We'll be back in a little bit with that show. And then, of course, back again tomorrow, noon Central live for Volatility Views, followed immediately after that by Options Oddities. Going to get weird, going to get wild. What crazy paper will make our tape this week? You got to tune into Options Oddities to find out. If you haven't joined the Pro yet, theoptionsinsider.com/pro is the place to go to get all that exclusive content, to play along with the giveaways, and also get all the live goodness you could possibly handle in your ear holes. Theoptionsinsider.com/pro. And Mr. Uncle Mike, where should they go if they want to get more Uncle Mike in their lives, including your hot new URL, crypto is an ice cube in the refrigerator.com?
I love it. If you want to learn, I try and put out a lot of content. I'm putting out YouTube videos, trying to get one of them out per week. Check out my YouTube channel, type in St. Charles Wealth Management, and you'll find my YouTube channel on YouTube, of course. Also, follow me on Twitter. I need some Twitter love, folks. I'm getting lots of love in other spots, but for whatever reason, people are not showing me the love on Twitter. I need it. At Mike TOSAW, TOSAW. Feel free to follow me. And if you are looking for a financial advisor who actually looks at options, check me out. Check out my website, stcharleswealth.com. Would love to have a conversation with anybody. You can figure out how to contact me through the means on my website.
There you go. Give the man a follow, at Mike TOSAW. He's tweeting about straddles right now, and also, I'll tell you what, we're going to retweet all that goodness. So if you can't find him on your own for some reason, we shall make sure you beat a path to Uncle Mike's door. And the Rock Lobster, he's out there tweeting about crypto as an ice cube. You know what kind of goodness you're going to get from him, at OptionVol on the old Twitter. Mr. Rock Lobster, sir, if folks follow you, what kind of goodness are they going to get?
You're going to get, go to optionbit.com, 888-TRADE-01. Call Ted. You say, hey, listen, I heard you on this OP radio thing, get 10% off. Doesn't matter that Mark Longo's the benevolent dictator of the network. You still get 10% off. Despite him, you still get it. So check it out if you want to learn to trade vol. You want to learn what this delta neutral, positive theta thing is all about, how to trade the long strangle, how to trade a long strangle and get positive theta. Woohoo! How the heck do you do all these things, Andrew? Well, you can learn all that. Take my 30 years of option experience and put some learning in your head. All right, there you go. Have a good day. 888-TRADE-01.
There you go, optionpit.com. Uncle Mike, I have a surprise for you. I'm looking at your Twitter right now, and one of your 223 followers is the folks at Genesis Volatility. They run all the crypto analytics. They're the sponsors of our crypto show. For some reason, they are following you. I guess they don't know you are the owner of BitcoinReallySucks.com. I have a feeling if they discovered that, you might lose a follower down to 222. What do you think, sir?
And if they saw my tweet that I just put out while you were talking, I probably would lose another follower.
I don't know how they found their way to your door. I'm guessing through us, but they may be disappointed when they discover what Uncle Mike's all about over there. Give him a follow nonetheless, at Mike TOSAW. Back in a little bit for TWIFO, and of course, after that, for tomorrow for volatility views and options oddities. And we'll see you back here on Monday, another episode of the Option Block. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.